Chawla, the MD and CEO of Gulf Oil Lubricants India, joining us on the show. Stellar set of numbers by the company. There has been growth across the board. Volume has grown. And this is despite everything that's happening globally and geopolitically. So, Mr. Chawla, good morning and good to be speaking with you. I just want to understand what has worked out so well for you in the quarter gone by. You've reported record numbers for the first quarter. If you can help me understand what factors have driven this growth, and is this growth sustainable with everything that's happening geopolitically?
Yeah, good morning.
Morning.
Supply security was really a foremost priority for us, given the situation, as you mentioned, quite a, I would say, mini crisis. And we ensured uninterrupted supplies to all our customers, OEM channel. I think this was the strength and, agility in execution. Obviously, we've been growing 2 to 3 times the industry, but this quarter has been definitely a very, very strong quarter and a good start to the financial year. Record numbers all across in terms of volumes. So I think that has been key to be able to keep our customers, the supplies. We have a lot of OEMs, B2B customers, our channel partners. So I think this was a key strength for us and really give us a good set of numbers. Again, I think this is also a strong, commendation to what we've been able to achieve in terms of supply and, of course, explaining the price increases, which was a key task.
Okay, Mr. Chawla, I believe that the business really was impacted on account of everything that was happening on the geopolitical front, especially with respect to oil price volatility. And you did tell us that you're trying to secure supplies for your customers. But do you believe that the worst of West Asia-led crude availability and crude price volatility is perhaps behind us for now?
See, we are buying base oils and additives, which are chemicals and packaging materials. So base oil normally follows the trend of crude, but because of the supply constraints on base oil, which are different groups, there is definitely the crisis made it a bit difficult for people to have the regular supplies. We managed it pretty well, I think, and that's the reason we have done well. We still see that the costs are high, even though we hope that the crude remains 85, but as of now the costs are still going up. We've already had 2.5 increases. Another one because we do carry stocks, the industry carry stocks. So this will still continue. I think hopefully when the crude is around 85 and then we might see some coming down. But for the next few months, I think we still see the costs will remain and increases have happened, and still the cost of the raw materials that we have bought are there in the system.
Since you're telling us that cost remains elevated, and at the end of last quarter, you did suggest that you have undertaken some price hike already and that you would probably undertake some more. Have you already undertaken additional price hikes in the last 1 or 1.5 months, or anything in the annual in the near future?
Yeah, so since March, April, there have been close to 2 to 3 increases, and we are implementing these increases. So as of now, yes, the prices of the raw materials, and I think the industry also knows that, the customers also know that. So at the moment, I think the prices are at the level they are, and we'll have to wait and watch. But yes, the costs have gone up.
Have gone up. You're waiting and watching to take some pricing action. Mr. Chawla, I'm trying to understand, on account of all of this, what do you believe the absorption of your pricing action will be, and what will that do to demand? And consequently, will you be still on track to maintaining that 12 to 14% EBITDA margin guidance going ahead?
Yeah, we have done that. If you see the quarter results, we are at about close to 13%. So we are very confident of that, and we have a good mix of products. So I think that is where we are. We would also like to move to a higher band, but 12 to 14% definitely with the current situation. Hopefully, when things start looking better in terms of cost, and of course, our sales are always 2 to 3x the market, we will look at that. But at the moment, it is obviously in that band, and we are confident that we'll manage that with all the challenges.
Okay, so EBITDA margin guidance in the range of 12 to 14% remains intact. That's the word coming in. Mr. Chawla, also wanted your thoughts on the capacity expansion plan. There's one at Chennai, there's another at Silvassa as well, and they're both scheduled to be commissioned in the second and third quarter of this year. One, are they on track? And two, any other capacity expansion plans other than Chennai and Silvassa?
No, we have 2 plants. So I think these 2 plants, we have announced capacity increase, as you rightly said, by 70%. These will be in line with by Q3, Q4 of this financial year. And we are on track to do that. And definitely the last few months and even Q4 of last year and this year, we have seen a good demand upsurge. So the plants are operating to close to nearly 3 shift capacities. So this capacity is going to help, and it will come in phases. and it will help us to meet our current demand and the next 2 to 3 years demand what we see. So overall, it's on track, and definitely, as you see the demand surge happening, it augurs well that we'll be able to manage this more effectively.
Right. And, Mr. Chawla, while you speak of demand, you've consistently guided for growth at 2 to 3 times the industry rate. Do you believe that this is sustainable? Are you still confident in achieving this metric over the next few years?
Yeah, as you know, lubricant industry is quite competitive. We have certain market shares in certain segments which are close to double digit. But given our brand position and our business strategies, we are very confident that a lot of the segments where we focus in B2C and B2B industrial, these are segments where we have a lot of potential to grow in terms of B2C, the brand and the distribution is one example. The other is across categories, there are lots of scope to grow. And that's where we talk about Unlock 2.0, which is our sort of mantra going forward, which is accelerate, premiumize, and transform. So we really feel that getting to the right market share with our brand strength, of course, our partnerships with OEMs, our B2B industrial, where industrial is also doing very well in the country. We are still not having double digit in all. So that market share gain is definitely something and we've been doing it consistently for over 15, 16 years.
Okay, so that's as far as capacity expansion is concerned, but I also wanted your thoughts on the electric vehicle business. And you've already said that the new Tyrex plant is expected in the third quarter of FY27. What is the revenue contribution that you are expecting to generate from this new electric vehicle business? Is it already contributing? And if yes, how much? And how much is it expected to ramp up by going forward?
Yes, so we have a 65% stake in Tyrex, which we acquired 3 to 4 years back. This business has done 100 crores for us in the last financial year. As we explained, this is into DC chargers for buses and fast chargers and also in AC chargers. So the capacity that the Ahmedabad plant that we have, we obviously have announced that we have spoken about how we're going to get market share, and that's in line with that. And we believe that this business obviously is the charger business is a business which is growing. EV penetration is going up, as you know, across in terms of buses, cars, and that is where we are positioning the product. And it is a mobility business investment we have made, and that is where the expansion will happen. In the long term, we expect it to be close to around 300 to 400 crores. Of course, the EV penetration, other things will. So 3 to 4 years, we are expecting that we'll be able to get that, and similar margins to what we make in the lubricant business. And yeah, this is a growing area for us, and definitely mobility is an area we are keeping our eyes also to look at more investments here.
Investment, does that mean more acquisitions? And second part, Tyrex, you did talk about 300 to 400 crore contribution. Is it in terms of revenue, EBITDA? How does it fit?
The revenue in 3 to 4 years, because as I told you, the revenue last year was 100 crores. So yes, we would see it growing. Also depends on the environment around in terms of the charger, demands. But that's what we see in terms of revenue.
Mr. Chawla, lastly, before we let you go, what's the kind of growth runway that you're seeing in the data center segment, and how big of an opportunity can this become for the company in the next, let's say, 3 to 5 years?
Yeah, so as we have shared, we have 2 products now, which is definitely we are looking at data centers. We have started talking to active data center, those who are expanding, because this is about liquid cooling. So that discussions are on. The 2 products we have in our global portfolio are ready. And the market size as a percentage volume will be, very low, but still a segment which is growing fast. So we have the 2 product candidates. It takes some time to get these tested. We have started talking to operators now who are bringing in the technology. So I think that's where it is. And we are already into, EV fluids. We are into other segments, which are the new kind of wave segments. This is another new wave segment, and we are ready with the product, but testing and getting it validated with the actual operators. Also to add here that not many data centers in India have now started using this technology. It is still in the very early stage, but we have started the discussions. A couple of them are coming up, as we know, in India. But as you also mentioned, this is a high growth segment, and we are going to be prepared to participate in it.
Okay, so that's as far as the outlook for data center business is concerned. But Mr. Chawla, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what FY26, 27 and 28 could look like. Thank you for joining us today. And on that note, we need to slip into a very short break, but the management of Narayana Hrudayalaya will join us after a very short break. Stay tuned.